Hello and welcome. Let's do some Fibonacci analysis for today, Crypto Day, 3rd day of April 2018, and it's a Tuesday. Welcome. Everything within your own risk or reward. Start off with Status Network, code SNT. And when you see this opening, this is when it comes out. It came out June the 28th, and they pretty much started at 1. And then it goes down to wherever it goes down to. But I'll just go like this, and there's the data. Price action from July, falling from 3,000 down to, well, 380, and then making a rally up to 4,800. And within these markets, you go straight up like this. That's just how it's done. The amount of time that it took to go from 1,000 to its top was December 28th through January the 3rd, so we'll say about a week, maybe a little day or two more. And the amount of time to go to this low was January 3rd to like little past mid-March, so over 2.5 months. Markets go up a lot faster than they go down. As far as correctionary moves on this, or trying to change the downtrend with it using the 18 average as the guided indicator. Price action once got above the 18 average of highs. After doing such, it was unable to successfully consolidate within the 18, and we can see on February 15th the signs that this would go lower, and sure enough it did. Now it's made this rally up decently above the 18, but now it's back to where it came from. Stage 1 band flattening out. That's first thing that it's done. So that's taken care of. We've already went through that analysis. Let's now go through Fibonacci. And those are the answers, but then the high is 48, the low is 280. Key numbers: 829, 16, 21. And then miscellaneous numbers when needed at 548, 24, 55. I'm going to insert the 4 lines on the screen right now. And there we have it. So the lines as we see it, when the lines are spread out not so evenly, like too crunched at the bottom, well, this tells me that the logarithmic chart is not performing to such. 23.6% down was very much a level of support. And oftentimes from failed moves will bring fast moves in the opposite direction, and here that didn't happen so much. I mean, it barely got up here, so kind of did, but kind of not. However, it did resist this level in a hole, came back down consistently, consecutive red days down to this key support mark where it stayed there for close to a week. Failed breakdown, but no, it resisted in here, so it wasn't a failed breakdown. And then it comes back to its key area, so this is what's been making this band flatten out, resisting what's last key point. So therefore now is this resistance established in the area where it was supposed to, and getting out above this 24.55 will be a very interesting resistance level. And if this doesn't work and this move doesn't hold, 18 average gives in, price action stays around the 1120-ish area, then we can almost make an appointment for 829 in the near future. Now let's move on to TRX, that of Tron. It's very, very new, as this thing came out in early March. So it's in about its 5th week or such, so there's not much data that we can go on. The 400-minute time frame, well, this is all I got. However, I got good information. Key low and a key high. I drew this trend line in from before. Well, what happened on the break? Things fell pretty good in that sense, or that's what the result happened to be. So therefore, using this high and this low, which is using the calculation high divided by low to the exponent of the fib percentage, I'm using 23.6, 38.2, 61.8, and 76.4. And I'll multiply it by the low. Let's insert the 4 lines now. And within the first 23.6 down move, support pretty much right at the number. And rallies up, but doesn't make the any further gains north of 632, which meant it was able to get over 10% more from that point on. When it came down to it for test number 2, oh, did it fail? And it failed huge. It came down to this key Fibonacci point. The low was in at 504, the Fibonacci 505. At next 400-minute period, that is, it rallied up, but not so much, and then it failed below it. So very low supported at this point, but it didn't make a move. It was a pierce above this level. That's a very, very odd situation that I see here. So be it. I'll have to look at this area as a key second hit support in the area of 430 to about 413, even 407 as a pierce below. But it has resisted this Fibonacci now. After resisting it, 2 periods down to the 18 lows. Okay, so this is a big, big spot within this declining period for it to be able to attempt in reverting the trend. It's got barely a green candle. It's given back some of its gains today. If it's able to hold in within this area, then that's going to be enough to make this band flatten out and strengthen the level of this 505 resistance point to the situation where if it breaks above it, I'd expect a fast jump move to the 565 handle within TRX. But if this level doesn't give in, I'm going to be looking more aggressively at 376 to be a key support than I would 421, only because on this lowest period, it pierced above that point. Let's take a look next at Ohm's Go, and this is the entire data that we have. And not normally when these things come out do they go up from the start, but this one did, and it has a clear bottom in at, I see 2,100, 2,047 area. And then it makes it to this high of 329,888. Substantial pullback, and it's making a, so far, lower high resistance to this high, but higher high from the resistance back in November, which it is now supporting on yet another occasion. Okay, so what we're going to do is let's take a look at the 4 key Fibonacci numbers within this, with a Fibonacci upside rather. If this thing does break resistance, I'm going to be looking to calculate it from this high to probably this low. But let's take a look at how the 4 numbers or the 4 lines look on this chart. And what we have is a situation where it's currently resisting what the 23.6% down move was. And on the way down, it supported a little bit, but this is what I say when these levels just stop going down. This is a bearish situation where it's accurate. Okay, yeah, it came down to it here. It made a little rally from a well-pierced below of 126 up to, well, 200. That's a huge number rally for profits if you look at it in that sense. But either way, coming up to the 18 average was an area where it showed very poor support. And then Fibonacci hit almost to the line here. The low is 113,175. Wow, how close was this? 113,175. This was 4 basis points for Satoshi of a 6-figure number differential on it. But it supported it, had a rally to the 18, and then the next time it comes down to it, it fails. It went to the middle of no man's land, basically, when you're basically about a 50% retracement. Some people like to use it. It's not Fibonacci, but it is, to me, the midway point from 2 key numbers, so it does have validity within it. But throwing that part aside, at least I don't think it's Fibonacci. If it is, I'd be interested to know how. But the resistance comes to play really, really well, and then it's supported the major pierce below this level and a decent pierce above here. However, if we just now scroll to see things a little bit better with less candles, after coming down towards this point, first thing to note is if you buy around 58,000 on this lower area and you've seen the price go all the way down to 44, if you panic sold, well, this is why I wouldn't like to do such, because you can very often get patterns like this where if it works out that you bought here and you could have bought cheaper, keyword coulda, shoulda, woulda, Well, you know, coulda, woulda, shoulda, there was a lot of great selling opportunities. Resisting this point amazingly, and then correcting via just a small couple price downs. Then when it got above this, large size move. It didn't take long to go from this point. It pierced below this line, and this can be annoying factors when you're trying to sell just barely above the 170. So say you have a seller at 169 and whatever. That can be frustrating in this game, but that's going to happen so many times. That's just part of the game. But within this point afterwards, you support this key level very effectively. Now it does get to this point where it resists key Fibonacci up and down for a little bit. And a decent price correction doesn't come down to this line, but it does manage to come back to the key level. So one test of it, price down, two test of it, and then a large amount of prices moving down, or a lot of time. Then it comes back to it again for test 3 of this fib, and I guess you can even count test 1 even here, so a fourth test. And then it tests it again on the 27th, 28th, and that was the last time it's been there. It has supported this level here. How close to the low is this? We have 11,3032. So this only goes under it by a matter of like 138 points, or 138 Satoshi. Another decent Fibonacci play. But since it rallied up there, and it's a decent sized move going from 113 handle to the 139, because that's a differential of about 26,000, or that of better than 20%. So some possibility for some trades along the way. But as we can see within the recent time frame, it's been grinding the 18 average of lows from the 20th through the bottom so far here on the 1st. So better part of a week and a half just grinding the 18 average of lows. Meanwhile, it stayed above this point, but albeit barely. It has had one decent size gain on the session yesterday that got up to the 136, but it's already fallen back to 125. That doesn't mean, because it's fallen so quick, that it's going to be a failed breakout, although it might be. And then you got the situation, if it holds this area, you're going to get band flattening out. So you got a lot of conflicting messages that can happen within this stage. Stage 1, band flattening out, even establishing resistance has already happened. And even coming back to this band, you can make a case for. But when you look at it from this point, maybe you want to see a higher established point. After all, we are seeing a lot of low volatility in the last few weeks compared to this run-up. So for some people, that is established resistance. For me, probably not. If it comes back to it again and consolidates there, that would strengthen how big the 136 point would be. But if this area fails, I'm not going to be too enthusiastic at the 113 handle being significant support, as we've seen so many times. Test 1, like in here, you come up to it and then you just crush through it. So therefore, maybe a move to that 50% retracement, or at least what you could be looking for is a thing like a Fibonacci downside method within this lower volatility. And I would be looking for this low at about the 113 handle, and the high at about 139. Multiple ways of calculating it, but the way that works for me is I take the high, divide it by the low, and I root it to the exponent of negative 0.618%. And we're going to be using again this low and this high. And within such, the level I'll be looking at is around 98,972. And that's, of course, if this happens on low volatility, or the volatility that we have been dealing with for quite some time. But because of a break of this key situation after coming down well above it on February the 6th and this rally, which ultimately would be failing, that you can oftentimes expect that if volatility picks up, that this level is going to be only maybe short-term support at best. And when I say short-term, that's like looking at it on like the 1 minute, 5 minute, 10-minute time frame kind of deals. And then you could very oftentimes get a move. I'd be looking mainly towards a 50% retracement. I guess you'd be like in between, but there's definitely risk warning signs that if this thing gives in below 113, that you could have a relatively fast move. I wouldn't expect one period to do it and such, but one situation, if it gives in, is price action maybe does fall to the 100, maybe within the next day or that day or a couple days later comes up piercing above 113. And then a few days later, maybe 4 days to grind back down to 98. And then it's going to maybe come down to about like 81 later. Just hang in there, go sideways, continue to grind lower, make a lower high, however, and then make it down to this 58. If that's going to happen. But again, if the band flattens, you start to see this area of established support hold, especially if it can do so at around 121, because if you shorten out the time frame so you can see the most previous resistance point that it's had, which I guess we would be talking about roughly in here, like 121, which has already established it. So if this low can hold, that's going to create bullish sentiments, or at least more bullish, getting definitely towards a neutral stage by doing such an occurrence. Okay, I thought I'd cover a couple more codes, but this is long enough for this video. Thank you for tuning in, and have yourself a magnificent crypto day. Bye-bye.